gold is money right now, meaning when you transfer any any dollar or yen or euro or whatever, what it is that you are doing is you are transferring a derivative of gold or silver. That's what you're doing now. Now the question is not when gold will regain its preeminence, but when fiat currency as a substitute for gold and silver will lose its preeminence as the way to transfer gold and silver when making a transaction. So do I believe that gold and silver as gold substitutes will lose their preeminence for the main method of transferring real money, which is gold and silver? Yes, they will lose that status because statistically, every single gold and silver substitute that has ever been known to man in all of financial history has all fallen to zero. So do I think this will be the first exception in world history? No. I'm not naive, and I don't believe that. The Federal Reserve, which is arguably the most powerful central bank as the issuer of the world's reserve currency, they are in negative equity for the first time since 1980, meaning the assets on their balance sheet are losing value, and as they own assets, and those are bonds, mostly treasuries and mortgage-backed securities, and the value of those securities fall when you hike interest rates. And so the dollar, which is chiefly backed by those assets, treasuries and mortgage-backed securities, and a slight little amount of gold in Fort Knox, which is also on their balance sheet, those assets are losing value. And meanwhile, the Fed has to pay more and more in interest on the excess reserves that it pays these banks. There's something like $5 trillion in reserves, plus all the reverse repos, that all this cash that the banks can't really do anything with, so they loan it back to the Fed, and the Fed pays interest on those reserves. So the Fed has to pay more and more and more of those dollars out to banks, and they're getting less and less and less on their assets on their balance sheets, so they're losing money. And the financial definition of hyperinflation, you can define it in consumer terms as when the desire to hold cash balances falls to zero. You can try to define it in terms of the rate of price increases in the consumer sector, or you can define it financially as when a central bank, the issuer of that currency, goes bankrupt. But what happened in 1973 was you had the oil embargo, and I think in that year, food prices went up just in that year 20%. And there were real worries of hyperinflation in that year. And what did gold do from 1974 to 1976? It fell. It fell like 50%, some crazy number like that. And everyone was asking the same questions, not on Zoom or Skype or Riverside or whatever technology we're using, but gold bugs are saying, what is happening here? Why is gold falling? You have an oil embargo, you have these crazy price increases, and gold is going down. That's insane. The answer is yeah, it's insane. But does it last? No, it never does. Because what happened from 1976 to 1980? Gold quintupled. All right. So, years from now, people are going to be looking back and saying what happened with what happened with gold and silver from, from 2020 to 2022 or 1974 to 1976, whatever the years are. Okay, so gold went down. It does that. But then reality is still reality, and the reality still is that all of the money that we use, all the money substitutes that we use, are still based on that same pyramid where the base of it is gold and silver. That does not change. That cannot change. So how long is this going to last? Are we in 1976 now? I hope so. I believe that we're close. All of these bank balance sheets that are stuffed with debt to the gills and all over the world, all that debt goes to nothing as it can't be repaid. And so everyone's balance sheet, all banks' balance sheet reset, and they all go bankrupt. And then we go back to like a 1980s price array in dollars. And is that possible? Yeah, but it would it destroy humanity? No, it wouldn't destroy humanity, but it would be a global reset, a financial reset where basically everyone in power today, everyone in financial power who make their fortunes by the inflation of the money substitute supply, they would be out of power because they'd all be bankrupt, and then they would have to peacefully transition from their positions of power to being peasants. They're not willing to do that. They're not going to do that. What they're going to do is they're going to keep inflating, and they're going to try to build their own safety nets, their own parachutes, their own separate wealth accounts of gold and silver somewhere in some bunker, and they're going to fly away to their bunkers when they need to, so they don't get lynched by the mob. And then they'll just let us. They'll leave the mob with the damages. They printed so many dollars, really, since 2008, that there's all this extra cash that the Fed has to pay the banks on those reserves, or the banks will have to try to loan them out into the economy. And that would be catastrophic for the dollar, because then all of a sudden you'd have these trillions of dollars in the economy that weren't there the day before. And what happens to the value of the dollar then? I mean, it would be unprecedented. Everything that's going to happen since 2008 is unprecedented, but it would just be another unprecedented thing within the unprecedented chain of events that's happened the last 12, 13 years. And so they're paying the banks to keep them in, and they're going to have to pay more and more and more. So it puts them in an impossible situation. Either they suffer the losses on their balance sheet, which means that the dollars that they have to issue these banks to keep their reserves inside the Federal Reserve System, those dollars are literally unbacked, because the dollars that have come into existence until now, how they come into existence is they buy treasuries. Like, the Fed takes in the asset of treasury on its balance sheet, and in return gives the liability of the dollar to whoever they're buying the treasury from, which is usually JP Morgan or some commercial bank. There's no way the Fed can stop its losses without printing more money and buying more bonds. That's what it's going to have to do. It's going to have to reverse interest rates. And we all know what's going to happen to gold and silver when they reverse interest rates, when price inflation, as they measure it, is around 10%. Everyone's going to say, "Oh, forget it. The dollar's gone. We're going to go to real money." That's what's going to happen. So it's one thing or the other. I mean, we see the Fed being sandwiched in on both sides, both directions. Either they lose money on their balance sheet, or they destroy the dollar, and they're running out of maneuvering room. It's just a matter of time, just waiting for that singularity to hit where they really cannot move anymore and everything explodes. And I think it's going to happen suddenly. When it starts to move, everyone is going to know at the same time what is happening. And we're not far away from that. I don't think we're years away. I think we're months away, despite what's going on in the gold and silver markets. Look at where we are in the world. We're the first situation ever where we're experiencing a global bankruptcy. All governments are bankrupt. It hasn't revealed itself yet, but usually what solves these problems is bankruptcies. When you no longer have the resources with which to enslave people, you stop enslaving people. It doesn't matter if you want to enslave them. If you can't do